A lot of people chase high yields, but in 2025, stability and cash flow are what will win. In this video, I'm showing you two dividend stocks that aren't just paying you, but they're built like financial fortresses. Whether the market goes up, down, or sideways, these businesses keep cutting checks to their investors. And look, I'm not just picking off random names on a list. I'm showing you companies that are financially bulletproof, the kind of stocks that let you sleep peacefully while your money works for you. Let's start with the company that's as steady as it gets, one that's been paying shareholders for over half a century. That stock would be Johnson & Johnson. When you think of the reliability in the stock market, Johnson & Johnson is one of the first names that comes to mind. They've been paying and increasing their dividend for over 60 consecutive years. That's through recessions, wars, inflation spikes, and market crashes. And here's why that matters. Consistency like that doesn't happen by accident. It's backed by fundamentals. Johnson & Johnson brings in over 17 billion in annual fee cash flow, and their payout ratio is only around 45%, meaning they pay less and half of their earnings in a dividend. That gives them plenty of flexibility to reinvest in R&D and still reward shareholders, which is great for a company like this. What really sets Johnson & Johnson apart is diversification. They're not just a Band-Aids and baby lotion company anymore. The company is now focused on pharmaceuticals and medical devices, which are high margin, high growth areas. After spinning off their consumer division, Kevnu, Johnson & Johnson became leaner and more focused, less overhead, and more innovative. Add to that a AAA credit rating, the highest possible score, the same level as Microsoft and even higher than the US government, and you've got one of the safest dividend payers in the world. The current dividend yield is sitting around 2.68%, and with their payout growth rate, you're not just getting income, you're getting consistency. And if we go ahead and check out their dividend history, you can see as we scroll that they've grown their dividend payout every single quarter so far. Except they're struggling in 2024 a bit. We can see that they have grown their quarter year by year for 60 years consecutive. If we go back to the early 2000s, late 90s, they have been growing their dividend. Bottom line, Johnson & Johnson is the kind of stock that lets you sleep at night. While others chase hype stocks, this one quietly compounds wealth and pays you every quarter. And that brings me to my second stock on this list, a company that's not only stable, but positioned for massive growth for over the next decade. And that stock would be Microsoft. Everyone knows Microsoft for Windows and Office, but the real story here is how the company has evolved into a cash flow machine. In 2024, Microsoft pulled in over $80 billion in free cash flow. That's enough to buy an entire company outright and still have billions left. They've got a fortress balance sheet with a AAA credit rating and more than 90 billion in cash reserves. So yeah, this one isn't some risky tech startup. What makes Microsoft so powerful right now is AI and cloud computing. Their cloud platform, Azure, continues to grow double digits year over year, and they're integrating AI into everything. Word, Excel, Teams, Windows through their Copilot product. That means recurring revenue, higher margins, and even stickier ecosystems. Now, Microsoft's dividend yield is smaller, around 0.6%, but don't let that fool you. This is what's called a dividend growth stock. They've raised their dividend every single year for more than a decade, and their payout keeps growing at around 10% annually. Combine that with strong capital appreciation, and your total return potential is massive. And the crazy part is, if you had invested $10,000 into Microsoft 10 years ago, you'd be sitting on over $100,000 today, and that's not even counting dividends reinvested. It's proof that when you mix growth, reliability, and consistent payouts, you get one of the best investments in the world. Microsoft is in a rare class of companies that can dominate technology, grow rapidly, and stay financially disciplined. That's why I consider it one of the most reliable dividend stocks heading into 2026. It's the definition of long-term wealth. So let's recap. Johnson & Johnson, the ultimate defensive stock backed by decades of steady cash flow and consistent dividend payouts. Microsoft, a modern growth engine that keeps expanding its profits while rewarding shareholders. Both are built to weather any storm. If you're focused on long-term compounding and reliable cash flow, these two deserve a spot on your 2025 watch list. If you found this video helpful, drop a like. It really helps the channel grow. Comment below which dividend stock you're holding for 2025. And don't forget to subscribe for more weekly investing breakdowns. I'll see you in the next one. Stay consistent, stay invested, and as always, keep building your wealth. Peace.